Welcome back to Dukascopy TV. Now, commodity trading boosted its share of the Swiss economy tenfold over the last decade, but now it faces the challenge of maintaining the features which make it most attractive. Joining me in the studio is Dan Day Robinson to discuss. Dan, thank you very much for coming in today.
Thank you.
Now, could you tell us, Dan, first of all, about some of the changes which are facing the Swiss economy in terms of increased legislation, first of all, please?
Well, there's a whole raft of regulation and legislation covering commodities markets at present, Monica. Most of this legislation has been aimed at protecting investors. So, for example, and it goes back a long way. So, for example, the US passed the US Exchanges Act in 1936. This was updated in 2000. More recently also, the EU implemented the Market Abuse Directive. All of those regulatory activities and legislative activities were directed really at protecting investors in our markets, in developed markets mainly. What's happened more recently is that legislation has been passed with a wider remit to deal with issues concerning physical commodity trading markets and extractive industries as well, mining industries. For example, in the US, the US Dodd-Frank Act of 2010 deals with the need for transparency. As you know, many trading firms operate in emerging markets. Usually those countries are exporters of commodities. And when we talk about transparency, we're trying to, if you like, make more open what trading firms do in terms of, for example, payments to governments in those emerging countries. The EU has also, within the last few weeks, announced that it will implement more stringent measures to deal with transparency, and the activities of companies in emerging markets will be affected by those regulations as well.
Now, the pressure to regulate comes as the EU pushes Switzerland to abandon the auxiliary regime, which allows traders outside to pay less tax than those inside. That's the what, if you like, but why has it sort of came to light now, do you think?
Well, basically, the EU has criticised Switzerland for a long time over its treatment of holding companies and so-called mixed companies. Really, it criticises Switzerland because it considers the way that the Swiss treat holding companies and mixed companies as a kind of violation of the 1972 Free Trade Agreement. Really, for me, this is an issue of competition. This is an issue of the fact that, you know, we've seen that since many commodities trading firms have more than 80% of their earnings coming from outside Switzerland, they're able to take advantage of these benefits arising under Swiss tax law. Clearly, since we've seen the huge explosion in trading in Switzerland and many firms have come here, since we've seen that happen, those firms have moved possibly from other EU domiciles. The reality is this is a question of, if you like, the tax cake and how the tax cake is cut up. There's also the issue of transfer pricing. The question is whether trading firms in their trading activities are correctly apportioning transfer pricing and therefore reporting profits correctly. But I think the EU, this is simply a matter of competition, and the EU is putting increasing pressure on Switzerland as a result of these competitive issues.
Now, in recent years, commodities trading has generated around 8,000 jobs, but some people do say that the costs might outweigh the benefits because dodgy activities could damage Switzerland's reputation. What is your take on this?
Well, I think that one of the suspicions of trading firms has been because many trading firms are privately owned, and so their activities are perhaps not as publicly scrutinised as those of public sector companies. I don't think just because they're private and just because they make good profits is a reason for thinking that they're necessarily dodgy. Look, Monica, in every part of our society there are people who engage in morally questionable or unethical activities. So I'm sure that in the commodities industry there are examples of things which could have been done better, that perhaps have been subject to question. But my feeling is that since the commodities industry is employing, well, according to Swiss government estimates, 10,000, more than 10,000 people, and since it's contributing 3.5% of Switzerland's GDP, that's according to Swiss government estimates, surely the benefits must outweigh this potential, if you like, reputational concern. What's really important is that the commodity trading firms themselves and the private trading firms do actually take action to, if you like, regulate themselves and do abide by the raft of Swiss legislation which deals with, if you like, illicit or corrupt activities.
Now, as you said, traders are rather going to adopt voluntary rules, and they have willingly committed themselves to evolve their corporate governance. Is this a foolproof plan, would you say, in terms of maintaining both competition and transparency at the same time?
Well, look, Monica, no plan is foolproof, so I think it would be crazy to suggest that it would be. What I strongly feel is that you know, regulation of itself is not the cure-all or the solution to everything. You know, commodity trading, merchanting, if you like, buying and selling of grain or agricultural produce or metals, or even more recently oil and petrochemicals products. You know, this has been around a long time. There are going to be some abuses in places, and as I mentioned earlier in the discussion, you know, no amount of regulation is going to remove all that. What we need for a thriving merchanting industry is for as little regulation as possible, but regulation which deals with excesses and abuses. Earlier this week, the CEO of Cargill, Greg Page, said at a conference in Lausanne that as commodity merchants we have a choice. We can either earn and embrace the governance and regulation we want and need, or ignore our ethical, behavioural and societal obligations, and then accept the governance that others may impose upon us. And actually, I think that Mr. Page is absolutely right. The bottom line is, as I mentioned earlier in our discussion, you know, trading firms, merchanting firms have been the subject of scrutiny because largely their activities have been private. I don't think we should confuse the tax debate with the regulatory debate from the point of view of transparency. And I don't think we should say, well, you know, we need to regulate because people are making good profits. But I do think it's very important that the industry looks at itself and examines how it behaves and what it does. That's really the position I think the industry should take. It's not foolproof, self-regulation is not foolproof, but I really don't think that there's any other alternative.
Thank you so much for your insights and for taking part today. It's been a pleasure. Well, that's all from myself for the moment. Please click back to Dukascopy for plenty more exclusive interviews, press reviews and much more. Bye for now.